Welcome back to the Capital Mindset Show, everyone. Giving you guys another video here today, and this one is on PayPal. Well, more like a PayPal revisit by, request of you guys, the audience. You guys actually drive all the content, if you guys didn't know. So if you're a subscriber, your voice is heard, and you guys drive the content. So this one's going to be done with the perspective of another content creator. This is not going to be to, poo-poo on their parade or anything like that. I want to do it respectfully and, just with all intents and purposes. If, respect where respect is due, all in the fun and games of what is the market, so we can have a further discussion on potential disagreements, etc. So PayPal is a company that is one of the largest payment providers in the entire world. Probably maybe needs an introduction. I don't know about you guys, but I'll pull up their financials, etc., and as well as their stock price to kind of see how they've kind of behaved over the period of time. So today they're up 4.20%, 420, right there. We got to have some jokes, guys. And over the past 6 months, they are down 60.25%. And there are plenty of videos that you can actually find in the content library regarding the stock. This will be yet another one. So for example, if you go here, you press Control F and you do PYPL, it's not case sensitive. You can actually find the stock in question right there, PayPal. And you can see by date of publication when it was. You click on the link, it takes you to the video. If you're so curious, you get to do that. All right, so that should be in the description below. But all in all, I can kind of pull through some of these videos and show you guys what were some of my thoughts back in the day. Spoiler alert, if we actually look at, let's find which one was the first one. So is it there yet? Okay, so this one was the first one. So this one was when the actual, in terms of analysis, the company was about $183.93. PayPal Holdings was trading around there, and we did see an interesting retracement from there. And basically, in summary, what we saw here wasn't really worth it. So this is with my ex-co-host Austin. We had a blast talking about this. And when the company came down, I think it was this video. Yes, it was this video. This was posted February 9th, 2022, and the stock was at $123. And I still had similar conclusions where I did not believe that it was priced appropriately, and that was my opinion. And in this one, I gave under the context of another content creator who did also provide something in regards to, evaluation. And then that one, I think, was this one. All right, so this is another creator out there, and all respect to him, he has a CFA and everything. And so he had some implications or some factors that came out to about a price target of about 660, and I don't want to misquote him totally, so I want to find his grouped ones. But he had another analysis, so he had a terminal, and then this one's an IRR calculation, giving about a 577 price target. So you can see, let me see where the totality is. Geez, where does he put it? I forgot. Oh, gosh. All right, whatever. The point is he had, he believed that $188 that the company could yield really good rates of return relative to the market, so market-beating returns. And so in this video, I was kind of criticizing some of the methodology in a fun way, in a lighthearted way, nothing to be mean about or anything like that. Okay, and then you guys are the viewer, you guys could see. All right, so then he has recently come out, and this is where the request comes in. You guys give me the request with the context. Again, if you're upset that I'm covering someone else and blah, 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 well, I'm sorry. That's how it was requested, and that's how it's going to be, all right? So he made an update video, and basically the price target went from, or not the price target, but the implicit buy price, and the notes guided me a little bit, but you guys showed me a little bit about it, and where was it? Skipping through. Okay, so price, go down, price, let's go, there it is. So $86.29. And that's according to that variation of the model. But one thing that he did discuss, because I did watch a little bit of it, I don't have enough time to watch the entire thing. Where is it? Where's the price? Give me the price. All right, not giving me the price. But anyways, the price is far cry from $660 is what I want to say. Okay, and that being said, there were some things that he actually stated that could be a good case study or learning lesson for pretty much everyone. And that would be in terms of looking at how many inputs you're putting into an analysis. I've discussed this many times before that there's going to be almost infinite ways to design a model. That doesn't mean all ways are good. That doesn't mean all ways are bad. That just means that there's multiple ways of doing it, or many ways, almost uncountable methods in terms of how to evaluate a stock, in terms of how to evaluate any kind of model. You can design a model to do pretty much anything, and you got to be very careful in modeling design because you can kind of input your own biases into it. One thing that is very you have to be very careful is when you're doing any form of mathematical modeling, you have to be very careful of the quantity of predictions you're making, because then that increases the range of uncertainty. And anyone who study this can probably attest to this in the comment section below. But yes, the greater the factors that you kind of input, the greater the uncertainty kind of lies out into the future. And then if you extend that for longer periods of time into the future, you kind of extend that range of uncertainty even more. So they kind of like a multiplier effect of sorts. So he did discuss this, and he kind of realized that in his older model. So again, I'm giving, we're just pointing it out, constructive criticism, not to poo-poo on anyone, but that is the case. And so with PayPal, that is a company that I have talked about more recently in conjunction with a couple other stocks, but this one's just dedicated to PayPal. And PayPal is otherwise known as a actual gateway. So they're a gateway, not an acquirer, not anything like that. There's a gateway, and they facilitate transactions, make transactions safe. So one thing that people have been a bit too bullish on was the growth rates during a pandemic, which is something we discussed in one of the older videos. You guys can go check them all out at your leisure, but in summary, that was one of the concerns. And even in assuming some of these growth rates, I was stating that you don't really get any margin of safety. And a lot of people were really bullish on PayPal above $100. PayPal is now closer to the price points where I said the stock was interesting. And I guess that's why it's being requested again. So because we're pretty much at those price points. And if you can see there, if I zoom in here, and I'll show you guys right now. So you can see right there. Well, this is kind of like paradoxical because we're watching a video of me, so you can see me in the back, just like, with a weird face, of a video about me talking about the stock when it was higher. So if I pull up more like where we kind of had the, I want to go to the analysis. This is what I get for don't having chapters. I suffer myself. Don't worry. I suffer too. So we can see that we can't have that strong of a margin of safety at those ranges, but for the most part, we can kind of assume, I think growth rates comfortably around 15 to 20-ish%, somewhere in between there is where I'd say PayPal can grow for the foreseeable future. But there's a lot of competition, and we've talked about those risks as well. So with something like PayPal, you have a race to the bottom of sorts, and that's what PayPal is. It's a company that is constantly trying to make things more efficient and cheaper for people to facilitate transactions. And there's constantly competition trying to come in because the margins are so good. And remember that PayPal is not like Visa or MasterCard. If you think that, smack yourself in the face. You deserve it. No, I'm kidding, you don't. But don't think that. Learn that Visa and MasterCard are the networks, and American Express and Discover are other networks, but Visa and MasterCard are the biggest networks, and they are the rails of the system. And PayPal actually operates on those rails. And in fact, do I have it on me? No, I don't. But there is a Venmo credit card that's, Venmo's owned by PayPal, and that operates, I think, on the MasterCard system. So they're not competing against each other. Don't think that. Stop. And so the moats or the barriers to entry for something like a network is extremely vast. Something like PayPal, not so vast. The networks will work with whoever they want. PayPal just has to be, the secure form of transaction. It's a gateway, and that's what you have to understand. This business, this industry has gateways, acquirers, lending banks, and other ISP banks, right? So these are the banks these are the entities that make up the entire market, and you got to figure out what the company is that you're going. So, for example, GPN is also an acquirer, right? So they're an acquirer. And then PayPal is a gateway, similar to Square. Square is both at the same time. And then you have some of the lending banks like Bank of America that is both an acquirer and a lending bank. So you have that as well. So you got to consider all these facets of the industry. Now, PayPal might have a place within my portfolio. When I did further research into PayPal at my last place, it was quite interesting in terms of what this could become. Unfortunately, there's a lot of competition, which kind of draws down the excitement behind it. But if I go, take you guys over to the model, and you guys probably remember this video, but let's actually put PYPL. So do kind of an update, and this will be served as an update of sorts. We can kind of let's wait for the model to actually come in. I think it's coming in. So a price target about $167.95, implying 125.74% upside. Strong buy forecast by analysts, and you guys could see that if I just do that. All right. So when we kind of come in and try to pencil out some growth rates, I do think that the company is going to be a little bit more aggressive in terms of providing cash flows to shareholders or returning capital to shareholders. And again, the growth rate, I still maintain that. It can vary, and you may not need that much of a margin of safety. For me, especially now, I think we're closer to the tail end of the liquidity crunch. So my margin of safety will be coming down for a little bit It's a little bit more complicated than that, but I'm oversimplifying it. And in terms of growth rates, I think that getting past this point, the company can probably feasibly grow at about 15-ish%. I think that that's actually a possibility. So I'm actually going to put that in here. And the higher ends, or I think they can grow, for example, 18%. And let's say on a far more aggressive, like extremely aggressive, very low probability, 25%. Kind of putting it in there with those probabilities. On a lower end, I think, 10% and let's put 8%, right? 8% on a conservative measure. So if we can get this thing at like $60, I think, I'd definitely be buying. But buying right now, I'd probably be pretty compelled to add some PayPal to the portfolio. So I wouldn't be surprised if you actually end up seeing PayPal in there. Kind of like that similar strategy where I buy in. If I don't get the price I desire, I don't care. I won't be upset. But I want to perhaps add some PayPal to the portfolio. And, just kind of ease in over time. If the market kind of provides to me that opportunity and nothing changes fundamentally, I would like to build it out into a position. So I'm not going to be, don't be surprised if it actually ends up in there, okay? It might end up in there. It's not a guarantee, but it's a big possibility. So if we actually look at the cash flows, estimates are still that they're going to go up. Revenue is still estimated to actually come down, right? So still estimated to come down, but cash flows are expected to rise. Shares outstanding are, I think personally that they're going to continue to come down as the company actually reverts to a more shareholder-friendly approach towards capital returns in the form of buybacks. I don't know if they're going to do dividends, but the buybacks for sure. And so the company looks interesting to me at these prices. So here I am saying to you that while I think his newest video, he is a bit more cautious, I'm starting to get a little bit more excited. All right. And I recall, or I reckon everyone should go watch the video. Don't just take my word for what he said. I'll be fair with you. I did not watch the entirety video. I kind of just skipped through it because I don't have time to watch the whole video. But you guys gave me the synopsis, or some of you out there, you guys know who you are. You guys gave me the synopsis of this video. I'm basically going off of your synopsis here. And so for the most part, I see that he changed to a more cautionary approach from and that's kind of counter to his previous stance, which was very bullish. So $660 to I think like a 85, something like 115 price. I saw it somewhere. I'm kind of upset that I can't find it again, but he had it in here. Why can I not find it? I think it's $115. It's down there. I want to drag. There it is, $115. Found it. Finally. All right, so there we go. So from 660 to 115. Again, constructive criticism, not to be mean or anything like that. That's not the goal. I personally now would probably. I'm starting to get interested in this stock, and that's a far cry change. If you watch all the videos of PayPal, it was a different sentiment. So now I'm changing, but I'm not guaranteed to buy it. I'm just want to be very clear. Again, if you guys are curious, there's actually one of you who was already in here and checking out. I made this hopefully to be useful to you guys. I got to actually update it and put all the new videos that have been created. Over time, my goal is to have this chuck full of videos where someone, again, could go, and that's, again, the goal of this YouTube channel. It's kind of like it's almost like a diary of sorts where I'm basically putting out my thoughts here and out there in the world forever. And someone could go back and see all of it right there and kind of keep track of it, see if there's any updates to any stocks that I've talked about in the past. And everyone has to remember, it's actually, especially within the finance industry, time changes things. So things I said in the past, they can change in the future. For example, I have to do a update on Asos. Asos is a company that we looked at way in the past. We didn't really like it. Now it was at $30. Now it's at like $10. So I got to do an update on that one. So this is considered to be the update on PayPal, as well as fulfilling the request on a quasi-reactionary sorts to this video. Kind of closing thoughts or case study again to remind everyone, when you're doing an evaluation or any sort of analysis, the greater the assumptions you begin to make in terms of like input from a human, such as determining a terminal multiple or anything like that, the greater the uncertainties you're going to build into your valuation, the less accurate it's going to be. And especially if you extend it out for 10 whole years, in fact, that's a multiplier effect on that uncertainty or that inaccuracy, right? And so again, we went under the context of the liquidity crunch for basically the duration of this whole year, thus far. And that's been a theme of this YouTube channel. Again, if you guys are new to the YouTube channel, you guys can go check out all the old videos or just talk to the community members. I think most of them can kind of bring you up to speed because, we've been talking about it for a long time. And so under that context, PayPal was very expensive before. And more obviously. It was obviously expensive before. At these prices, though, I got to say, it's pretty interesting. It's pretty interesting. All right. So on that note, guys, thank you guys so much for watching. Remember that to look at the link down below for our sponsors of today's video, including the FTC, the SEC, the IRS, treasurydirect.gov. You know, if you use our promo code, you absolutely get no benefits, but I get a percentage of your tax returns, right? That's how things work. And don't worry, if you're international, don't worry. I'm going to get those sponsors as well. I'm going to get your local governments. I'm going to get the government of the UK, the government. I'm going to get the ECB as a sponsor. You know, they're totally going to sponsor this channel. We're going places. We're going places. With that being said, have a good one.